Hello everybody, my name is Paul Buitink and today I'm going to talk to YouTube investment guru George Gammon, who runs a hugely popular YouTube channel with over 158,000 subscribers. Welcome, George.
I'm glad to be here. Thank you for having me.
Love the cap and the fat. Yeah, is this still from the Ron Paul election campaign? Or?
I don't know where my employees got this. They bought this for me for my birthday. They bought me this hat, and then they bought me a coffee mug with it's two boxers fighting, and one of them is throwing like a right jab or a right cross and hitting the other one right on the face. And my Photoshop people put my face over the guy doing the punching, and they put Jerome Powell's face on the boxer that was receiving the punch.
Classic.
Yeah.
Good stuff. Well, thanks so much for being on the show. I've been following your channel for quite some time now, and then 2 weeks ago I shot a video with Richard Werner, and then some guy at Twitter says, you really have to talk to George Gammon. I said, oh, that's good, because I've been following from quite some time, and it's really nice to have you on the show, because I especially love your videos about the Venezuelization of the US, and also your videos about the end of the US dollar as reserve currency. So let's address these topics in the next half hour or so. But maybe to start with some bit more about your background, because maybe some of my viewers don't know you yet. So if you could tell a bit more about who you are and how you came to your channel, and what is your investment experience?
Sure. I was an entrepreneur for many years, and I retired in 2012, the ripe old age of 38. And when I retired, I needed to start investing my own money. I wanted to be in control of that. And I didn't know the first thing about it. I didn't know what the Fed was. I didn't know what a yield curve was, absolutely zero. So I just dove in head first. And I was actually in Singapore at the time, at the Marina Bay Sands, about 15 minutes before a dinner date on YouTube, ironically enough. And I stumbled across Milton Friedman's Free to Choose series. And that just took me straight down the rabbit hole. And he articulated beautifully so many of the things that had been in my mind as an entrepreneur for so long. And then I went from Friedman to Thomas Sowell, and then I started studying guys like Jim Rogers, Peter Schiff, and Jim Grant, and a lot of these kind of Austrian guys in the investment space. And that always made a lot of sense to me. I looked at Keynesian economics and some other schools of thought, but the Austrian school always it was just kind of more commonsensical. So I gravitated towards that. In the middle of 2012, we were in the depths of the housing crisis in the United States. Prices had been going down since 2006. So I thought, well, maybe housing is cheap. And I know Jim Rogers likes to buy things when they're cheap. He likes to buy low and sell high. So maybe I can be like Jim Rogers and buy something cheap. So I did some homework. I looked at a chart that I use to this day of US housing prices going back to 1900, adjusted for inflation and the size of the home. And I saw this pretty much straight trend line. And then in the beginning 2000s, it just boom, goes parabolic straight up. And so we get to this peak in 2006, and I noticed it comes crashing all the way down to where we were right then in 2012, right at its historic trend line. So I thought, maybe there's something to this. So I looked at Japan and their crash in 1990, and I saw that their prices from the top to bottom went down by, what was it, 60% roughly? And this was over the span of 15 years. So we were 6 years into this, we were down by 50%. So again, I thought, well, maybe the housing prices aren't that cheap, but the cash flow that you can get from the housing is extraordinarily cheap. The debt was cheap back then, although I didn't use much of it. So I just kind of went in head first, and I got a baptism through fire in the area of real estate. When I was a entrepreneur, excuse me, I made quite a bit of money overseas. So I was always just very comfortable doing business in other countries where I thought I could get a higher margin. So once I learned the real estate game in the United States, I naturally looked to other areas and trying to use that macro approach that I had been learning since 2012. In 2015, that brought me to Colombia, where I wanted to go long oil, but I didn't know anything about oil. And I knew the Colombian peso was roughly correlated to oil. The peso was super cheap. So I thought if I could buy assets denominated in pesos, that would be a way of going long oil at the time. The only thing I knew was real estate. So I said, well, I'll just buy Colombian real estate that's denominated in pesos. And at that time, I was really good at going in and buying assets really super, super cheap, finding motivated sellers and forcing appreciation through a remodel and either flipping it or keeping it in a rental portfolio. So I started doing that in Colombia. I've been doing that ever since, and I've done it in other areas of South America. I've tried to do it in Europe and a couple places, but I haven't gotten a deal out there yet. Brings us to 2019, and I've got this huge team in Medellin now that we're doing a lot of these remodels and flips or keeping them in this rental portfolio. And I thought, well, shoot, we're doing this. We might as well turn it into a TV show. I know these things are super popular in the United States. I don't know the first thing about producing a TV show, but as a former entrepreneur, I've always had that mentality of probably being overly confident in my own skills and then just shooting first and asking questions later. So that's what I did. I pitched the local TV station. They said, yeah, if you want to produce it, we'll throw it on there. We'll split the commercial profits. So I said, let's do it. And I had to just kind of figure out how to produce a TV show within a matter of about 3 weeks. Once we did the first season, it was great, super popular. I had awesome editors. We were kind of in this holding pattern before we started the next season. That's when I started the YouTube channel, because I had all these amazing editors and people that were working for me at the time. I wanted to leverage their skill set. And we were just doing like real estate videos. But my passion, as you can probably tell, is macro. Yeah. And even though I really enjoy real estate, I love talking macro, and I'm just constantly listening to podcasts ever since 2012. That same kind of obsession or OCD mentality that I had with entrepreneurship, I kind of just moved that over to macro. So yeah. I started doing a couple of these videos on the channel regarding macro, because that's just what I really like talking about. And sure enough, those were the most popular videos. Those took off, so I just did more and more of those. Now we've got 150 some odd thousand subscribers, and here we are. I've had an amazing opportunity to interview people that I had always looked up to, and I've learned so much from over the past. People like Brent Johnson and Luke Groman and Juliet DeClerc and Eric Townsend and Patrick Seresna, Jeff Snyder, all these people that you see on Real Vision and Macro Voices, including people like Doug Casey, Jim Rogers.
Yeah, of course,
as a matter
Jim.
of fact. Yeah, I interviewed Jim, which was really a highlight of my life. And I don't say that just to brown nose. It really, really was. And hopefully, I can't wait to interview him again. But I've interviewed Schiff, I've interviewed Robert Kiyosaki, and I mean, all these things that just 8 or 9 months ago, I never would have dreamed that I would have been able to have those experiences and be able to talk to these people one-on-one, and definitely not within the matter of a very short time frame. So I feel that I'm very fortunate. I've got a fantastic team. They do these whiteboard videos, and it's really all about my editors. They make me look a lot smarter than I really am.
It's funny because it looks like a one-man show, but it's and I didn't realize there were so many people behind it. But especially those whiteboard videos, they're very persuasive, and it makes you look smart. But it also makes it very easy to learn these difficult concepts. So I like the interviews, but I'm really fond of the whiteboard videos. And when did you stumble upon Bitcoin then? Because you're also quite a big believer, I think, in Bitcoin, right?
It depends on what you're trying to achieve within your portfolio. I like to compartmentalize my portfolio into insurance, investments, and speculation. So I think Bitcoin is a phenomenal speculation, but I think it's very poor insurance. So it really depends on what your objective is. But I stumbled across Bitcoin just like everyone else. It's kind of leans more libertarian, and you want a source of currency or money that is outside of the control of the government. And that was always, wow, that's a really neat concept. I hope this takes off. And I never really got into it other than just kind of looking at it from afar saying, boy, I sure hope this thing works out. And then when I started the channel, I've gotten more and more into it from trying to understand how it can lead to a very successful or intelligent speculation above and beyond just, oh, I like it from a philosophical standpoint, so I think I'm going to buy some.
Right, but if you look at your portfolio and if you divvy it up in percentages, do you have what kind of percentage, for example, do you have in gold and if you can then real estate, Bitcoin? Could you say something about how you divided your own portfolio at the moment?
Sure. Yeah, absolutely. So 10% for me is insurance. That would be physical gold. And right now, because of the craziness, I'm not able to buy physical gold. So if I get an extra, 50, 100,000, whatever, I'm buying 10,000 of Rick Sprott's, Rick Rule's product, the Sprott fund that has gold as their underlying asset. I believe it's PHYS. But then when this is kind of passed, I'm going to sell that and just go back to physical. 80% I categorize as an investment, which I would define as something that pays me to own it. So that would be real estate. That would be a dividend portfolio. That would be bonds, which I'm not buying now, but that would qualify. And then the other 10% would just be a speculation. And that would be uranium, the gold miners, Bitcoin, silver, things like that aren't paying me to own it, but things that I think are quote unquote cheap, and I think that have a lot of upside and asymmetry.
Right. Interesting. Okay, so let's talk a bit about macro then. Your favorite topic and mine as well. I run my own modest and honest podcast show, and I've also been able to talk to quite a few interesting people, and it's always a pleasure to add to that list and obtain another perspective. What is because in your most recent videos you talk a bit about the Venezuelization of the U.S. Could you elaborate on that?
Sure. If you look at how Venezuela became the hyperinflation Venezuela, you see that they did a few things. Number one, they basically consolidated or built their entire economy around one industry, and that was oil. So if that oil goes down in value, or if that's no longer a resource they can access to fund the rest of their economy, they have to print the money. And that's pretty much how they got to where, I mean, obviously it's more complex than that, but that's pretty much the Reader's Digest version. So if you look at what's happening right now in the United States, I'm under the belief that we are doing the same thing from the standpoint of building our entire economy around one thing. Of course, our one thing isn't oil, but I think our one thing is or are asset prices. So that would be the stock market. That would be real estate. If you just try to think through what the United States economy would look like if the Dow went to 15,000, or if the value if the value of real estate went down to the levels we saw in 2012. You could say, okay, if you've got an economy that's 70% consumption and that knocks out 20 or 30% of the consumption, regardless of what happens with a virus, I mean, that's just kind of icing on the cake.
Yeah.
You can see how the economy starts to crumble very, very quickly. And you've got this political narrative and narrative within society that inflation is dead. And the reason I think that's important is because I think we're gradually getting closer and closer to the point where we're like, well, let's just print the money. There is no downside to printing money. So what if we are, not producing any goods and services? We'll just print the money, and we'll just have foreigners produce all the goods and services. We'll sit back, do nothing, and we'll just give them green pieces of paper. Why would we not do that? Like, why would we work to produce goods and services ourselves when we don't have to, and we don't have to worry about inflation? And then you combine that with this move towards universal basic income, and however you want to call, whatever you want to call it, whether it's additional unemployment benefits, whether it's a freedom dividend, the net result is the same, and that's people maintaining or increasing their current purchasing power without producing any more goods and services. And going back to Venezuela, one of the reasons you get this hyperinflation is because you're creating more currency units without creating an additional amount of goods and services. And in a lot of cases, the amount of goods and services are contracting and shrinking, while M2 and velocity is increasing. And whether you're an Austrian, a Keynesian, whether you're someone that's an MMTer, they all agree on one thing, and that's if you print too much money relative to the amount of goods and services that are being produced or available, you're going to get inflation. And so I see this as, okay, we're kind of consolidating our entire economy or building it around asset prices, just like Venezuela did, except they just did it around oil. And we're putting ourselves into a position where we're going to have to just print more and more and more and more money to maintain these ever increasing deficits that the government is running. And we're going to be willing to do it because why should we worry about inflation? Inflation is dead.
Yeah.
And that's kind of why I use that term, Venezuelafication, or whatever it was in that last video.
Yeah, it's almost impossible to pronounce Venezuelization. It's the word of the
there
year.
You go. You got it.
Yeah, I practiced a lot on that word. But in Venezuela, of course, there was also a complete collapse in confidence in the currency, and it was possible to start using the dollar, for example. So there were alternatives, which also led, of course, to even more supply of the currency in the market, because people were just exchanging it for dollars also. So would also
or Bitcoin.
in the US,
I mean, I think Venezuela, they went heavy into Bitcoin too, didn't they?
Yeah, I think the story is a bit high, but how can how would it function in the US then? Like, there's no alternative to the US dollar in US that people can easily use instead. So aren't they not sort of forced or kind of stuck with the dollar anyway? Even with inflation, there's not really an alternative to them. Of course, there's cryptocurrency, but it's for many people that's not yet mature enough, and also highly volatile still, of course.
Yeah, well, I've been struggling with the concept of a world reserve currency over the last 2 or 3 weeks, just trying to ask myself, do we need one? I think we just kind of assume it's just one of those things that gets repeated so often. Well, there's no alternative to the dollar. Well, okay, but do we really need a world reserve currency? Like is it possible for countries to choose what currency they want to use when they do a transaction with another country or for a commodity? I mean, I don't know. It's kind of a question that I've been struggling with. Maybe it's just naive to think that we might not need a global world reserve currency. But I think it's all based on not just the dollar going down in value. And I want to be very specific when I talk about the dollar going down in value, because a lot of times people just throw that into one bucket. And it's a very nuanced type of question. So we've got the dollar could be going up or down against asset prices denominated in dollars. It could be going up or down relative to consumer prices in the United States. And then it could be going up or down on the DXY, which is basically comparing it to the euro. So when I'm talking about the dollar going down, I'm talking about it going down in terms of the DXY. We know that back in 2012-ish, 13, right around there, it was the DXY was near 70, like right between 70, 75. and it didn't affect the reserve status of the United States at all. You didn't see foreigners really just divesting themselves of any type of dollar-denominated asset. They loaded up on dollar-denominated debt, that's for sure. But I think it's a matter of how quickly that change occurs. So we've been in this range between, call it 195-ish for the last few years. I think if just we went like in a month down to 70 or down to 60, then you could see a lot of the foreigners getting rid of this hot potato, which is now the dollar, because they see it collapsing. And that really exacerbates the problem to where now people don't want to hold dollars. And there's really not an argument for the dollar denominated debt, because now those pressures have been completely relieved. And that's how and then also, if you look at the Fed, they don't have many FX reserves at all. So how do you defend that currency? Well, you say, George, they'd raise interest rates. Oh, okay. Okay. Well, let's think that one through. How, we've been at the zero bound for the last, call it 10 years. I know we've gone up a little there, but we had to come right back down. So that's another thing that's kind of a Venezuela type phenomenon, that if you have something that's completely artificial, like these low interest rates, people start to mold their behavior in the way they build their business all around these artificially low interest rates. So if you take away that subsidy, then all of a sudden the whole house of cards comes crashing in on itself. Like I use the example of Ecuador. I spent some time there, and like Venezuela, they had subsidized gas prices. So let's say you could get gas for $0.25 a gallon, and let's say you could do that for 20 years. Well, what happens to the economy if all of a sudden you say, okay, we're going back to the free market with gas prices up to $3 a gallon? It completely implodes. So I think that's kind of where we are right now with the Fed and the artificially low interest rates. And that's why I say, kind of jokingly, that they could increase rates, because I think that would collapse the economy and be just as bad as what we're seeing right now with the virus. And meaning if they allow rates to go back up to their historic norm, if they would, maybe the market rate is a lot lower than their historic norm, at say 5-6%. That means mortgages go up to maybe 10% or so. And what does that do to the real estate market and to asset prices and everything else? And then you have that asset collapse. So I don't think allowing rates to go up to defend the dollar is really an option. So it's once it starts tanking, if it does, and there are no certainties, I'm not saying this is going to happen. I just like to think through kind of how it would happen and then try to assess the probabilities. But I think there's definitely a reasonable argument for it just going down, 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 and then kind of creating this feedback loop to where people looked for alternatives. But what's really interesting is I think that the opposite could be true as well. So I'm talking about the dollar going down rapidly to where you would lose confidence, let's say. But if the dollar goes up, let's say it goes up to 110, 120, where all the pain that the world economy would feel because of this dollar denominated debt would be just incredible, especially with, of course, it's country to country. But if you were one of these countries that just your dollar cash flow was dried up and you're just getting pummeled from having all this dollar denominated debt, in one of my most recent videos, I called it the dollar PTSD type syndrome, right? Where you just get hammered from having this dollar denominated debt or doing business in dollars for the last, call it 30, 40 years. It's not just the dollar denominated debt. It's the United States having all of this control over your economy through sanctions or whatever else. The US has just a tremendous amount of leverage to kind of bully countries into doing whatever they want. So I'm thinking if the dollar went up to 110, 120, that could be the straw that breaks the camel's back, to where all these countries are like, okay, when we get out of this current situation, we are never, ever going to use dollars again. I don't
Yeah.
care how bad it is short term. We're just never going to put ourselves into that situation. So that's kind of the argument for the world reserve currency moving away from the dollar, by the dollar going down, and possibly by it going up too high, too
Yeah,
fast.
so but they're stuck between a rock and a hard place. Then they have a very narrow bandwidth within the Fed can operate, because they run risks on two ends. Then,
Yeah, also, if you look at the swap lines, I've heard some great arguments, and Brent Johnson and I had this discussion the other day about the United States being able to use these swap lines as leverage. And if they're trying to do this, then they would want the dollar to be within a specific range, because if it goes down too low, well, now all of a sudden they don't have that leverage anymore. But if it goes up too high, they get this PTSD type thing. So that's another cross current to think through.
yeah, well, of course, back in the day, Keynes already envisioned a global currency, the bankar, and of course, then
That's right.
we got Bretton Woods. But now,
That's right.
even today, I read an article in the Financial Times that China again was calling for more of a role to play for the SDR. Do you follow this debate about SDR, and do you think SDR has a future, perhaps as a new world reserve currency, comprising of a basket of all currencies?
Yeah, I haven't followed it other than listening to what Rickards says about it. And I had one of his audio books, I can't remember which one it was, where he talked about that extensively. I haven't listened to it for a couple of years. But so I kind of understand where he's going with that, and the argument for sure, because the IMF has, I guess, the only clean balance sheet now. But I don't know how that would work, because I think if people lose confidence in the dollar, they're going to be losing confidence in fiat currency. I don't think that I think those are synonymous. So if they're losing confidence in fiat currency itself, I don't know if the solution is another fiat currency, the SDR. And I think it's more, now maybe they back SDRs by gold.
Yeah,
Maybe they back it
not at the
by
moment.
yeah, maybe that's what they may do. But I think that if we have a loss of confidence in fiat currency, which I think is very realistic, I don't think that's a tinfoil hat thing to say. Obviously, within the next year, probably not realistic, but within the next 10 or 15 years, I don't think that's far out. So then the question becomes, well, how do they solve the problem? What other countries do, as you know, when they get into this hyperinflation type situation, they just switch up the currency. That restores confidence, and boom, they're kind of off and running again. So I don't see how you would do that without either Bitcoin or gold being part of the equation.
Yeah, so you think if we have a hyperinflationary collapse, which could be the dollar, but could also be the euro or China, because all the central banks across the world are basically following the same policies, of course, then people are
Yeah.
just fed up with it. They're not going to accept another fiat currency. They've done their research. There's all sorts of alternatives out there. People would then, you think or hope, choose a better or sounder alternative.
Yes. And I think there's a substantial argument for both gold and Bitcoin. I was really on the side of gold, and I still am, just because historically I think it's just proven, and although it's been debased before, a gold standard. And you go back to where they used to clip coins, and they used to make the coins out of a less amount of gold and add nickel to it. I mean, the governments, they just do this all the time. It's nothing new. But even though that's been part of the history of gold as money, I still think it's just kind of the default mechanism for society at large if we were to get to that point. But I just interviewed Preston Pish from the TIP podcast, and I mean, he laid out a very, very convincing argument for Bitcoin actually being the solution, because people will look back throughout the history of gold and say, well, yes, this works, but we can't trust these politicians, because once we start off with, let's say, a 50% reserve, the gold standard, well, we know that they're just going to lower it to 15%, 10%, 5%. We're just going to be right back in this situation again. So we want nothing to do with that either. We want Bitcoin because it's got a fixed amount of currency units that will never ever change, and the governments can't do anything about it. So I'm not saying that's how it will play out. I'm saying that's the Reader's Digest version of Preston's argument, and it was very convincing, very interesting.
Yeah, I like that video too. But at the moment, only 1% or so in the States own Bitcoin. The installed base of Bitcoin hasn't grown that much over the years. Do you think it's big enough to actually take over if something goes wrong with fiat currency over the next few months or years? Or you think it's too early?
I think if we have a collapse in fiat currency in the next year, which I'm not predicting, but I'm saying if, it might be too early for Bitcoin. But if I look 5 years down the road, 10 years down the road, even in my own life, I'll back up here quite a bit. People always used to ask me, what do you want to do in 5 years? Like, where do you want your business to be? Like, what goals do you want to achieve? And I always thought that was kind of I don't want to say a stupid question, but that's just me being honest. That's kind of a stupid question, because every point in my life, especially when I got done with college and got into the world of building businesses and attempting to, and failing at some and succeeding at others, and just kind of going wherever I think I can make the most amount of money. If you would have told me 5 years ago, or even 3 years ago, that I would be doing today, or I would be doing what I'm doing today, I would have never believed you. And that's not just from 2017 to 2020. That's if you go every 3 years, going back to when I got out of college, the same holds true. I never would have imagined that I would be doing in 3 years or 5 years what I was actually doing, or in that part of the world. And I think that it's kind of the same thing for the economic environment we live in today, from a country standpoint, but also the global economy. I'm just think about even 6 months ago, if I told you, well, maybe not 6 months ago, but now maybe a year ago, if I would have told you, oh yeah, by the way, in the middle of 2020, we're going to be in this global pandemic. The US economy is going to be just in pieces, and the stock market is going to be going up every single day. And the Fed's going to be doing, or committing to, $1 trillion a day in repo. They're going to be doing QE infinity, and actually admitting they're doing QE infinity. You just wouldn't have believed me. You would have said, what? The economic output in the United States has gone down by, call it at a minimum 25%. You've got, if you measured unemployment realistically, it would be over 20%. And you're telling me the stock market is marching back towards 30,000 on the Dow? You said, George, you're crazy. That's not possible.
Yeah.
Sure enough, here we are. So it's just, things are changing so quickly that I think it's easy for people to look at the way things are now and the way they've been over the past, let's call it even year or two, and extrapolate that forward into the future indefinitely.
George, you just switched off your video, by the way. I think you probably accidentally switched off your video. There you go.
Oh, now it's working.
Yeah, no, it was working all the time, but you were just.
Oh, see, it was never working on my end, but now it is working.
Okay, so you can finally see yourself. Yeah, no, that's true. Of course, everyone keeps on repeating that we live in unprecedented times, and it's true. It's very difficult, of course, to foresee what's going to happen. And of course, there's also maybe a scenario that when inflation picks up a bit, it will be maybe 70s style. So not hyperinflation, just good chunk of inflation,
Yeah.
but maybe welcome inflation to deal with the debt burden?
Well, it depends who you are.
Yeah.
If you're a senior that's on a fixed income, it's not going to be too welcome. And if you're someone that allocates a good percentage of their overall income to consumer goods that we purchase daily, it's not going to be very welcome. It's really, you're picking winners and losers. And unfortunately, what the Fed has done is built this economy where there's fewer and fewer winners and more losers. And I think inflation will exacerbate that problem, because when you think about how, like, if you think about stagflation, and people need to think of this, because again, when they think of inflation, they just think of, oh, well, that'll be great because my housing will go up, or the cost or the value of my home will go up, or the value of my 401k will go up. But they don't realize that that's not necessarily true. If you go back to the 1970s, you look at the bear market we had in stocks from, I believe it was 72 to 74, stocks went down by 60%, 60.
Yeah.
While at the same time, we had very high consumer price inflation. And these things can happen at the same time. That they're not just a monolith that goes up like the tide and down. So I think we could have consumer price inflation while at the same time we have high unemployment, and we have the stock market, real estate market, asset prices in general going down in value, maybe not nominally, but in real terms. And so my buddy Jason Burks, I think, says it very well, and hopefully I'm going to get this right, but he says that the kind of motto that he sees moving forward for the government and the Fed is going to be inflate, tax, and lie.
Yeah.
So, and I think that makes a lot of sense. To your point, the government wants to bail themselves out of this debt burden, so they're going to try to get inflation. They're going to lie about it by understating CPI, and they're going to jack taxes to the moon to try to make up for some of the revenue they need. But also, that's nuanced in the sense that just because we have consumer price inflation, it doesn't necessarily mean that it bails the government out. We just think of, okay, if the government's the largest debtor in human history, which they are, if we just get inflation, well, they're paying their liabilities back in cheaper dollars. Therefore, it's a transfer of wealth from the creditor to the borrower, and we all know the way it works. But the only way that's true for the government is if the inflation actually produces higher tax receipts. And what's happening right now in the United States is all these people going on unemployment, and they're actually making, some people making more money being on unemployment with the additional stimulus checks and what have you than they were actually making at work. So, okay, George, why does that matter? Well, it matters because almost 50% of the tax revenue generated by the federal government is from payroll taxes. So if you have fewer and fewer people on, if you have fewer and fewer people employed, more and more people on unemployment, then fewer and fewer of those people are paying payroll taxes. That means you could see this situation where the tax receipts go down while at the same time you have price inflation going up. And now it couldn't be dramatic, of course. If we had 30, 40, 50% inflation, then of course receipts would be going up. But I do think you could have a 1970s type of environment where the receipts going to the government are actually going down. Also, with the M2 money supply, if you look at a chart of M2 and you look at velocity, they're almost inverse. So M2 goes like this, velocity comes down pretty much at the same rate. And Lynn Alden, who's my partner in Rebel Capitalist Pro, she has a fantastic theory as to why this is happening. Because basically the Fed has created fewer and fewer winners, like we were talking about earlier. So you have more M2, but that M2 is being consolidated into fewer and fewer and fewer accounts, and therefore the velocity is going down at the same rate. So if you have all these day traders and all these people taking their unemployment checks and starting a Robinhood account, they're buying shares from, let's call them the fat cats, for lack of a better word. Well, that means that we've got more M2, or more money supply going to the fat cats, more of these assets going to the individuals. But people forget that capital gains tax is also progressive. So if you have the capital gains, the overall tax that the government's getting, let's say, going from let's just 20%. I know these aren't exact numbers, using them as an example, but going from 20% down to, let's say, 5%, because people in a lower tax bracket are owning more and more of the assets that are appreciating in value. That's another way that we could have fewer and fewer receipts actually going to the government if prices are going up. So a lot of moving parts there, to say the least.
Yeah, exactly. There's so many variables, and that's what I like about your show, that you analyze all scenarios, and you're not. It's for you. It's most important that people understand your train of thought and also do the thinking themselves, and then decide on what the future will be like. And we can go many ways, of course. Do you also follow the Eurozone a lot, or do you stay out of that? Because a lot's going on here in Europe, of course, and the future of the euro is still very much uncertain. Do you follow that on a close basis too?
I don't follow it as closely as I follow what's going on in the United States. I enjoy spending time in Southeastern Europe, but I see the issues with the euro moving forward. I don't see how I don't know how they solve the problem when you look at the issues of the southern part of the Eurozone compared to the countries who are, let's say, more prudent. I don't know how you get to a resolution there, but that's definitely not my area of expertise.
Yeah. Well, thanks a lot, George, for sharing your views. What's your next series going to be about on your channel?
Oh, I don't know. I just kind of, most of the time, I just kind of think about it the night prior, what I think is interesting. And I'm like, well, how could I explain this to people so they might think it's interesting too and might learn a couple things? And that's pretty much how I come up with one of these videos. In fact, I've got my legal pad right here. Let me see if I can show you one. Oh, here we go. So that's, I don't know if you can see that, but that's what a whiteboard video looks like before it's a whiteboard video.
Okay. I prefer the whiteboard version.
Yeah, I just come in here and I'm like, oh, that would be good. That would be good. And I've got ADD. I'm totally, I'll admit to that. And so I'm just like, oh, that's good. That's good. That's good. That's good. And I kind of put out this outline, scratch things out. And then I kind of just do a 1, 2, 3 with the different steps and just kind of just refine my thought process. And then the next thing you know, it's a video. Right now, what I'm really trying to sort through, at least over the last few days, since I've been back to the United States. I don't know if I went over that. Forgive me if I'm repeating myself, but I went from Medellin to Fort Lauderdale to try to get to the Caribbean. And I was in Fort Lauderdale for a couple days. And I hadn't been back to the United States. I went back just briefly for the holidays. That was to Dallas, but that was a kind of a familiar area because I was at my sister's place. But as far as just kind of walking around a downtown area, I haven't done that in over a year in the United States. And I must say, I was shocked, to say the least. It's not just the people walking around with masks. It's how politicized everything has become, to where if you're in Colombia and you're not wearing a mask, or you are wearing a mask, people don't automatically throw you into a political bucket. Where in the United States, if you just walk out of your hotel and you're not wearing, like, you got a mask on, but it's not covering your nose, then you got someone on the left just screaming at you to throw your mask on and thinking that you're oh, well, you've got to be that guy. You've got to be way out on the alt right, and you've got to believe blam, bam, 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 just because you didn't have a mask covering your nose. And it's the exact opposite. You know, if you got someone walking around in a hazmat suit in the United States in the airport, which I saw, then, you know, the people on the right are like, oh, look at that, you know, he's a crazy lefty. And it's just bizarre. And it's
Yeah.
kind of like a sci-fi movie where in Colombia, everyone's kind of on the same page, although there's restaurants shut down. It's just kind of like normal life, but just kind of everyone's wearing a mask. Where in the United States, it's just, it's not that way. You just feel this tension that I've never felt before. So I'm not overly optimistic, especially going into a election that I think is going to be even more contentious with the TGA, with potentially increasing inflation rate. I'm glad to be going to St. Bart's and just kind of watching this from a distance to see how it plays out. But I guess I've got off on a tangent there. I'm sorry. But I don't know if you guys are seeing those types of issues in the Eurozone or not. I sure hope you're not, but I don't
Well,
know.
it is less politicized than in the States, but a lot of that also, of course, is now in Europe, especially this whole cancel culture and the
Oh,
Black Lives
yeah.
Matter debate. It's very politicized, but not as much as in the US. In Holland, we also had a lockdown here. People also have to wear a mask in public transport. But in general, it's at the moment it's relatively relaxed. Also, because there are not many infections at the moment. But if we get a second wave, then yeah, our economy will also go down. Will go down. Yeah, the shit basically.
Yeah. And you know, I'm sorry, I was going off on that tangent. That my main point there was the next video I was trying to think through would be how much has the United, oh, I think I lost it there. Sorry about that. How much has the United States overconsumed as a result of having the US dollar? Like when I was walking downtown Fort Lauderdale, how many of those shops, the ones that are still open, how many would be there? How many of those high-rise apartment buildings and commercial buildings would actually be there if the US dollar had never been the world reserve currency? If America had to, if the economy was reflective of how much it actually produced, what would the standard of living be like? And I'm trying to mull that over to try to turn that into a whiteboard video to maybe start answering those types of questions. Because I think if we can answer those types of questions, we can start to get an idea of what the future may look like for the United States if they lose the world reserve currency status. They don't have all that incredible leverage, and they can't just go into debt 25 trillion with no negative consequences, with no downside. And I realize when countries lose their reserve currency status, it doesn't just bam happen overnight. So I'm not saying, but it's kind of a gradual transition. And I'm not saying the United States turns into a third world country overnight, but I think that maybe if you have less and less leverage, and all of a sudden the debt matters, we go back to the 1970s. Let's not forget we had Carter bonds, right? Most people forget about those. But if we go back to that situation, you know, do we have this gradual decline? And if so, what does the end game look like? And so I guess my point is I'm just trying to really go over that in my own mind, get that into a whiteboard video, because that's generally how I start the process of thinking through something to have an opinion, is a whiteboard video.
Yeah.
Just to get my thoughts out of my head and kind of refine my thinking and get feedback on it, and then just keep iterating and iterating and iterating until finally I'm like, okay, I've got a clear picture of what most likely to happen.
That sounds like a great series, the life after and the reserve currency.
Yeah, yeah, yeah.
Yeah. Well, good luck with that, George, and thanks for making time available, and enjoy your travels. Hopefully, it's not too cumbersome, and you find a place to rest and create some amazing new videos.
Thank you. I appreciate you for having me on.
Okay. Bye, George.